Hi everyone. Today markets did hold up pretty choppy on the session. You can see wicks to support, wicks to resistance, and then we ended up holding pretty much flat on the day, just short of that resistance here. And you can see the next level, 607. Seems like we might get through there in the after hours, but we'll see how it plays out with tomorrow's unemployment data.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
So we got Amazon shares earnings, and they were terrible, and you can see down about 4%. So a bit of a miss there. Amazon and Alphabet following in the same line. We kind of expected that, especially after the miss on Microsoft Cloud, which was another driver here for Amazon to go down. And you can see that here, slightly under 19% growth. AWS in third quarter was just above 19%. Amazon now gets 15% of its revenue from AWS, and it does mention that it's still larger than Microsoft and Google, and both of their peers also missed on expectations for cloud revenue. So cloud seems to be the story. Everybody missing on cloud, and that was true across the board, and all of those companies suffered on earnings. So like I said, you kind of could have predicted this a little bit, and this was in line with its peers. Moving over to fear and greed, we are here at a 41, up from a 39, a little bit of a bump there. You can see the market's been rallying over the last couple days. After hours is a little choppy, but so far so good. On the week, as we head into unemployment data tomorrow, strength still has not moved. It is going higher, but has sat in extreme fear for a long time at this point, over a month. It's going to be interesting to see if this continues to grow here. Breadth, hovering, still in fear. We'll look at that chart later. Put call ratio, pulling back slightly, still in fear, still a little bit elevated, up from that 0.6 area there. And then volatility, hovering, safe haven demand, spiking up a little bit, but still in fear. And then junk bonds. Wow, we got a move on junk bonds, sitting in neutral after today's price action. It'll be interesting to see what bonds did here today. Moving over to jobs data. Jobs data was terrible across the board here. Continuing claims higher than expectations. Initial claims higher than expectations. Previous number revised up a little bit. Continuing number was revised down just slightly, not a whole lot. Labor costs a little bit lower, so that was good. And then like I said, for tomorrow, non-farm payrolls. Unemployment rate there at 830. Gonna see how that plays out. That's gonna be the big one. If it steps up there to 4.2, I think that's going to be a big down move for markets. We'll see how it plays out. And then looking at max pain here just for a moment, you can see put walls at 590, 595, a little bit here at 600. We're kind of in here 600 up to 605. I think we'll probably see at least a little bit of a dip in here. 601, 602 makes sense, kind of a mid-range finish for the end of the week. Put call ratio is kind of depressed. It was up around the 4 level. Now we're into the 2s. So the put call ratio has gone down a little bit. That should give markets a little bit of room to fall. But there's still quite a bit of puts relative to calls. So I'm not expecting a ton of movement. Otherwise, getting into the charts here, you can see we did get a little bit of a bounce. 0.35 to the upside. Almost got to 607. That was the level. We got through some of the trends here. We're still kind of in this same consolidation range. This is the peak range though, right? So we've touched this zone here, here, and here. We rejected all 3 times. We're going to see, do we get into that tomorrow? Do we push through it tomorrow on good economic data? Or do we get the rejection back to 599? Potentially momentum. Still slightly bullish. RSI still slightly bullish. So market's holding up. You can see we're at the same level though on price, and we are at a lower RSI. So we're showing a little bit of weakness there. It'll be interesting. Definitely a zone. I think we'll probably throw at least a wick higher before we get the rejection. And then looking at the price action here, you can see consolidation, wicks in both directions. Could absolutely go either way. We're right below the trend here, looking for the push to 607. If it can get through there, there's upside for sure. Then we'd be in price discovery potentially if we got above the levels here from the end of January, but for right now, sideways consolidation as we head into economic data. Moving over to the Tasty charts just for a moment, this looks a little bit more bullish here. You can see we did get the pullback. We touched the upper levels like we talked about. We pulled back, consolidated in time. Held bullish conditions though. 603 was the level. We tested it here on the 1 o'clock and 2 o'clock candles, bounced here into the end of the session, retested slightly, very close to retested on the Amazon earnings, and then after hours, we're still catching a little bit of a bullish push here. So based on these, it looks a little bit more bullish to me, and then your upper target would be 608.60, which is absolutely in play. That's around a 0.5% higher, and you can see the volume coming through on the earnings. Volume pushing higher, dipped lower, and then ended up swinging to the upside. So for me, the volume fingerprint here says this is a little bit bullish. Moving over to the NASDAQ, this is a cleaner chart here. Definitely looks a lot more bullish. We tested the level, 526.50, pushed up to 530, just below it, falling a smidgen after hours, but not much. Even with the Amazon earnings, momentum still bullish, RSI still bullish. We're not nearly as high as the S&Ps relatively. You can see the all-time high up here, 538. But if 530 breaks, 533 is in play. That was the consolidation high up here. We filled this gap, obviously. It seems like we're headed a little bit higher. If it rejects from here, that could give us a potential swing back into the 510s. That seems to be the range here. Went to 533, down to 510, back up here 531.50 or so, back to 510, 511. So if it does reject again, we could stay in this kind of consolidation sideways choppy action, but if it breaks through that level and holds, then we could be looking for 538 like I mentioned. So on the hourly chart, looks a little bit better than the SPY. Consolidation, held the support levels, pushed up to that one. After hours, rallying through, want to see it push above 530. Obviously, it'll be dictated by the unemployment data tomorrow, but based on the structure here, this does seem to be a little bit bullish for me. And then looking at the Tasty charts here, again, a little bit more grinding to the upside style price action, higher highs and higher lows there. Did get a little bit of a dip after here, waiting to see if this goes a little bit higher into that second ATR band. And then the upper target for tomorrow would be 532.14 or so. If we get into this range, that would take you back to the highs from here, right around the end of January timeframe. Get through that level potentially, then I would look for a little bit of pullback. Remember, this is still choppy price action. You can see highs, lows, and even before that, we had bigger highs and bigger lows here. So I do still expect a rejection from here at some point, but for the time being, it does look a little bit bullish going into the economic data tomorrow. Moving over to the Russell and the Dow. The Russell was down 0.3, nothing crazy. It did dip below the level on a closing basis, 229.18, but we did hold the 9 EMA. We didn't even quite touch it there. Momentum is still bullish. We did have a technically higher high. We did get all the way up to 230.70, but I just felt like we were going to pull back, and I didn't actually move my positions, which actually turned out to be a pretty good move. So my covered call here is at 228. I think that's in good position here. I still think 232 is in play. You got the trend up here as a target, but we're still kind of inside this consolidation with 226 as your support now since 229 broke. And then the Dow, same thesis here, pulled back slightly. It's kind of in the middle of the range. We were looking for a break through of these levels. We said if it did, then we were off to the races. So far it has not. Your support is still 445.16. Momentum bearish. RSI breaking below the SMA there, so that's a little bit concerning. Got a high, lower high on RSI, waiting to see if this kind of follows through there. In the short term, it seems like this is kind of culminated. Moving over to Apple and Microsoft. Apple did break through the 21 EMA, a little bit of an up move, 0.3. It's through that 21 at 232.67. We're holding support in here. Momentum slightly bullish, not exactly the chart you would want to see. Usually you want to see something like this where you have consistent steps to the upside and then you kind of culminate here. Ended up going a lot higher from there, but at least you would have caught most of this move in here. Right now, this looks not super great. You could trade off the 21, like I said, or the level here, 230. Did give you a nice entry. The low of day was at 230.43, so you could have gotten in at a pretty good level if you were looking for an Apple trade here today. The target would be 237.23. I think it's in play. Certainly could look for the gap fill here. Looks okay. Sideways choppy still. Low, higher, low if you're looking for that push here. And then looking at Microsoft, we got back above the level, 413.36. We closed at 415, and now we threw a big wick. Are we just going to get back into this kind of sideways consolidation? Certainly a possibility. We've been doing it for seemingly forever, basically a year now at this point. We got here February last year, and we are here again February this year. So a year of price action in this range. Seems like that's going to continue, at least off of this dip low. Momentum stepping to bullish, RSI swinging towards the SMA. So maybe catastrophe averted in the short term. Maybe we get a lower high set up in here around that 425, 429 area. If it rejects from there, we get a lower low. Break through the level here, then that could be in play to the downside, but for now we're back above the level, which is moderately bullish. Moving over to Tesla and NVIDIA. Tesla broke down majorly here, broke through that 369 level, so it hit our initial target. If you took the trade yesterday, could have taken profits here. We threw a wick all the way down to 363, didn't quite touch that next level. Closed above it now, so you're kind of in no man's land. You're looking for a little bit of a rally here, maybe retest continuation lower, but you got this initial move, waiting to see what happens. Momentum bearish, RSI bearish, technically lower low from this consolidation here. And you could argue high, lower high. Everything says this should be selling a little bit here now on Tesla, and then you got NVIDIA, nice little pop there on the day. We said we should get some continuation since we closed above the level, and we did. Got another 3% higher into this range here. Now you got 130.35 as your resistance, maybe some trend in here, 131.60 or so. I'd say just a little bit more bullish, and then I would expect this to roll down. Again, for me, this is pullback in time, waiting for these EMAs and SMAs to consolidate. Once this does it here around that 130 area, I think this is going to roll to the downside, but for now, it hasn't quite happened. And then looking at Amazon, you can see the big sell here on earnings, sold off from around 239 to 229. Back to the trends here. The low of that wick was 221. So big sells across the board. We kind of thought that might happen with this kind of consolidation here. Went right to the 55, went a little bit lower. Momentum bearish, RSI bearish. Probably going to sell a little bit more tomorrow. We'll see. And then you got Google basically unchanged, 1 penny to the upsides, right at the level 193.31. Closed on it to the penny. Momentum bearish, RSI still bearish, still inside this consolidation. Looking at staples and discretionaries, still risk off environment here. You can see staples doing better, 0.46. Discretionary is still inside consolidation here on a relative basis. You can see same zone we've been in. Was up 0.4, but relatively you can see staples going higher, throwing big wick to the upside, holding that move here. Discretionary is sitting right in the same zone. Momentum bearish. I would take staples here. Discretionary does not look great. Moving over to breadth. Breadth continues to fade. Momentum bearish. RSI bearish. Everything says this should be going down, but it's not for now. So still watching it. Could hold sideways in this zone for a while. Nothing says it has to fall. And for right now, it is definitely not. We threw a little bit of a bearish day, but nothing crazy. Probably just hesitation ahead of the unemployment data. Moving over to the dollar. Dollar did not move a whole lot. Slightly positive, still hovering right at that 55 EMA. I would argue this is still a little bit bearish with the high, lower high here, throwing wicks to these upper levels and rejecting. But for now, we're kind of sideways consolidating ahead of data. Dollar is obviously going to have a large reaction to that unemployment data, and it's definitely not uncommon to see sideways consolidation ahead of major data. Moving over to my accounts, I held everything going into the unemployment data. I do kind of regret that now. We'll see how it plays out. I still have some protection. You can see 228 for tomorrow for $2.60. There's about $2 credit left on that. If we continue to fall, overall still made a little bit of money on that, even with the slight bearishness there. And then Qs, I'm still pretty solidly in the money at 526 for my covered call for $4 credit. So 530 is the max profit. Not a ton of room to the upside there. So if we do get a major down move on the unemployment, I should be okay. Maybe lose a little, but not too bad. If we get the up move, obviously I won't lose money, but I probably won't make a ton either. So like I said, probably should have taken these positions off. Overall, not bad though. Made some money on the day. Back into the green on the year, so you like to see that. It's been a pretty rough start to the year. I definitely did better last year, but this is sideways choppy markets, and I really had not adjusted to that quite yet. So sideways choppy seems to be what we're getting, and we're starting to get into those zones of resistance, but like I said, looking for just a little bit more up move until markets tell me that they're not going to go any higher, and so far we haven't seen that. We've been marching higher pretty consistently over the last couple days. Let me know down in the comment section what you thought of Amazon. What did you think of the markets today? Anything pique your interest that you want me to talk about in the next video? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.